Hey everyone, artificial intelligence was undoubtedly the hottest investing trend in 2023. In 2024, that trend is likely to continue. And in this video, I'm going to bring you one AI stock that I think is an excellent buy for 2024 and beyond. So I'm going to share with you what the stock is, why I like the stock, and why I think it makes an excellent investment for long-term investors. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the AI stock I'm talking about here is Super Microcomputer. The company is benefiting from the growth in AI, specifically in growth in computer servers, graphic processing units, and the things that support growth in large language models. And the company, in fact, has growing backlog of demand, so much demand that it's spending to increase capacity. And given the recent successful increase in capacity, management has upgraded its 2024 outlook to 10 billion to 11 billion in revenue from a previous outlook of just 10 billion. So raising the upside of the outlook for fiscal year 2024. And if we look at analyst estimates, they agree with Super Microcomputer. Here I have for their fiscal year 2023, which ends on June 2024, analysts expect SMCI to grow revenue by 17.4% and to grow earnings per share by 29.1%. For the fiscal year 2024, they expect that to grow by 16.7% and earnings per share to grow by 19%. For fiscal year 2025, they expect growth of 19% and earnings per share growth of 20%. So solid revenue and earnings per share growth expected by analysts for SMCI longer term. And that's been the case for Super Microcomputer going back the last decade as well. Revenue growing from less than 2 billion in 2014 all the way up to 7.39 billion in the most recent trailing 12-month period. Management is confident that they can grow to 20 billion or 30 billion in revenue over the next 5 to 7 years. Now, given the total addressable market for artificial intelligence, according to Statista, the total addressable market for artificial intelligence is expected to grow to $1.85 trillion by the year 2030. That would be up significantly from the $207.9 billion in 2023. Artificial intelligence is popularized by large language models like ChatGPT, but there are more applications like driverless car technology, recommender systems, and more. The companies that stand to benefit from the growth in this AI surge is companies like Amazon, Nvidia, Alphabet, Microsoft, and more. Investors getting in today could realize exponential returns from investments that capitalize on the growing effectiveness of artificial intelligence. And so, with the market being that large and growing that quickly, I wouldn't be surprised if Super Microcomputer hits those targets of 20 billion and 30 billion in revenue over the next several years. Another reason why I like Super Microcomputer stock is the growing operating profit margin. You can see that expanding from around 4% in 2014 up to 9.65% in the most recent trailing 12-month period. And if demand continues growing the way it has been, I wouldn't be surprised if Super Microcomputer operating profit margin starts to hit double digits over the next 3 to 5 years. Similar to its operating profit margin, Super Microcomputer has done a good job growing cash flow from operations. That hit 8.39% in the most recent trailing 12-month period. That was up significantly from the brief downturn here from supply chain problems in 2022. Another reason to really like Supermicrocomputer stock is because of the relatively strong balance sheet. The company has $543 million in cash and short-term investments and only $146 million in long-term debt. That means the company can use its cash and pay off its debt, and it'll still have about $400 million in cash and short-term investment left over. That means it's not constrained by a balance sheet that is struggling. The price to earnings ratio. The price to earnings ratio is an important financial metric I use to determine which stock is more expensive or if a stock is too expensive. Let me show you this example here. I have two stocks, one trading at a market price of $100 and one trading at a market price of $12. The one trading at a market price of $100 has an earnings per share of $2.58, while the other has an earnings per share of just 11 cents. When we look at their price to earnings ratio, the one trading at a market price of 100 is trading at a price to earnings of 38.76, while the one trading at a market price of $12 is trading at a price to earnings of 114. So in this example, the one trading at a market price of 12 is actually more expensive because I'm paying 114 times earnings to purchase this stock. That means if the company was to pay me earnings per share every year as a dividend, it would take 114 years for me to receive my money back. Whereas the other stock, it would pay me back in 38.76 years. Now, there's a lot more to think about in this equation, but to simplify, that's an example that shows you why a company with a market price higher can actually be cheaper than a company with a market price that's lower. That being said, Supermicrocomputer price to earnings ratio at 13.88 is on the higher end of where this stock has been trading at over the last 3 or 4 years or so. But that's justifiable given the substantial growth in the artificial intelligence market and given the increase in its backlog and given the exponential increase expected in the AI market over the next 7 years. That's understandable that the stock price would gain a valuation premium as a result of those market factors that worked in its favor. And so for all of these reasons I've discussed in this video, I think Supermicrocomputer is an excellent stock, an excellent AI stock to buy for 2024 and beyond. And before I let you go, let me thank my subscriber Ron Matthews for requesting this video on Supermicrocomputer. If you have a video you'd like to request, put it in the comments down below. I add it to my list and I get to it as I work through my backlogs. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.